Crypto miner Core Scientific cuts 10% of its staff and keeps the hash rate projection. The company also took a $840 million accounting charge to write down the value of its assets. Crypto miner Core Scientific cut 10% of its staff and dramatically reduced the value of its assets as the cryptocurrency route continued to drag on the industry. The workforce reduction was announced Thursday as the company reported its second quarter financial results, which included an $840 million charge to reduce the accounting value of its assets that took the Core's net loss for the period to $862 million. CFO Denise Sterling said during the earnings conference call that the staff cuts were surgical and didn't affect operational personnel in Core Scientific's data centers. Like other Bitcoin miners amid the crypto winter, the company has been forced to shore up its liquidity. In July, Core sold more Bitcoin than it mined, in part to keep up with costs. Now remember, most of these mining companies are selling their mined Bitcoin. The only one that hasn't really right now at this point that I'm aware of is Hut 8. Now, Hut 8 is the only one taking the strategy that I would look at personally, right? Which is try to hold all your cryptocurrency through the bear market and then get yourself into a good cash position during a bull run. The rest of them are all kind of having to sell. However, Core stuck with its forecast for the company's hash rate, a measure of computing power on the Bitcoin network and a key metric for mining companies. On May 12th, Core Scientific lowered its 2022 hash rate projection to 30 to 32 exahash per second and total power of about 1 gigawatt, citing market turmoil. The company retained that forecast on Thursday. CEO Mike Levitt said during the earnings call that 2/3 of the company's 2022 growth is set to take place in the second half of the year. The miner reported $164 million in revenue, narrowly beating the average analyst estimate of $161.8 million, according to FactSet data. Revenue more than doubled from a year earlier, driven by increases in digital asset mining revenue and hosting revenue, partially offset by a decrease in equipment sales, the earnings report said. CEO Mike Levitt said during the earnings call that 2/3 of the company's 2022 growth is set to take place in the second half of the year. But the miner's personnel and facilities costs have also climbed by 25% compared to last year, while their power cost has reached 5 to 5.5 cents per kilowatt hour. Answering several questions from concerned analysts about the company's raised its power cost expectations for the year, Levitt pointed to the company's Georgia facility, where Core faces the greatest exposure to rising natural gas prices. The miner is trying to get a better arrangement with its energy provider, the CEO said. The miner is also thinking about scaling up its operations such that economies of scale bring down unit costs. All of the same things that are impacting the rest of the economy are impacting the mining industries as well. And that is rising energy costs, personnel increase, of course, in their requirements for their salaries, because if the rest of everything you buy is going up, you need to compensate your employees to go ahead and compensate for that. So you need to raise their wages as well. Unfortunately, wages aren't rising up high enough with, of course, everything else in the world that's going on right now. And so you end up with a lot of people that are struggling right now. I think a lot of you all included, myself included. You have just basically in the mining industry, a very unique position where not only are you having rising costs, but you're having decreasing revenue. And it just makes things extremely tough because, if you were at least, maybe working a day job, you'd have consistent revenue, but your costs are still going up. It can be kind of stressful in the mining realm. The company mines Bitcoin for itself while also hosting other companies' Bitcoin mining machines. Revenue from hosting was up 110% compared with a year earlier, while self-mining revenue rose 920%. Hosting is in high demand after available rack space dwindled. But Levitt noted that a lot of folks that don't have a home for their mining equipment also don't have capital. And that's a great point, right? So a lot of the people, like the smaller miners that are looking into hosting, maybe they're located in like New York City where the prices are going really high, or, you know, California or something along those lines, that would be looking for hosting, have now also run out of capital, and you're at a very small level. So paying for hosting becomes a little bit sketchy. And Core is only interested in working with clients who can make repayments and are very, very credit worthy. And that is going to be hard to do, right? Because credit worthy and crypto mining don't necessarily go together. If you guys have tried to do anything with banks, or even trying to get leases or sign up for power companies, you have an LLC and you go, hey, yeah, I'm doing cryptocurrency mining. It's like everybody shuts you out, right? They're just like, no, you can't open a bank account. Sorry, you're in crypto. No, or, you know, we don't know if we can open this lease up to you. Cryptocurrency mining sounds volatile, all that same stuff. It's very difficult to be credit worthy within the crypto industry. I mean, I know that for me, when we were getting the lease for the mining farm, I had to basically convert a bunch of cryptocurrency and throw it into like a bank account and then prove the income and then pull it back out and put it back into cryptocurrency. It was very annoying. At the same time, Core has had to re-examine the profitability of its hosting business, the CEO said. In the good old days, we used to be resellers of servers, and there was a margin in that, Levitt said. We could look at the margin of that and combine that with our hosting agreements and look at the overall profitability. Now that we really don't have a very vibrant reseller business because most folks are going direct to the manufacturers, our hosting business needs to stand on its own 2 feet, he said. Core produced 3,365 Bitcoin for itself, and at the end of the quarter, it holds 1,959 Bitcoins for its reserve. Shares of the miner fell about 1% following the report. The stock has fallen about 68% this year, in line with its Bitcoin mining peers, as Bitcoin price fell near 50%. And this is the same old story over and over again, guys. Like I said, we're seeing rising costs and decreasing revenue within the mining industry. And it's forcing a lot of these miners to not be able to hold their Bitcoin, and they have shareholders to answer to, which is another huge problem that really makes it extremely difficult for these public mining companies. That being said, there is some light at the end of the tunnel, I guess, for some of these large miners, as crypto lender tied to Chinese rig giant throws miners a lifeline. Bitmain has about $5.6 billion of revenue in the last year, says Luxor, and Bitcoin miners can refinance billions of debt at a lower rate. Chinese Bitcoin mining rig giant Bitmain Technologies has been selling machines to miners for about 9 years. Now it's helping keep them afloat during the cryptocurrency market downturn through its ties with industry financier Antaplha. There we go. Antaplha. That makes sense because Antpool is going to be who they're working with. Bitmain and its Antpool mining spinoff are working with Singapore-based Antaplha to offer low-interest loans to miners to help them reduce borrowing costs and repay nearly $4 billion in loans backed by equipment which have fallen in value along with the price of Bitcoin since it peaked in November. Antaplha, which calls Bitmain and Antpool strategic partners, will use proprietary data from these two companies to enable it and other crypto lenders to evaluate financing risks. Max Leo, managing director of business development at Antaplha, told Bloomberg. Antpool is the second largest Bitcoin mining pool in the world. Bitmain has been one of the largest beneficiaries of the crypto mining boom in North America after China banned it in May of 2021. The mining machine manufacturer and consultant, which is still based in China while operating subsidiaries overseas, continues to have strong pricing power. It has the lion's share of the Bitcoin mining hardware market with as much as $5.6 billion in revenue over the last year, according to an estimate by crypto mining company Luxor Technologies Corporation based on purchase orders and rig prices. Quote, the launch of Antaplha financing products is a strategic move for Bitmain, end quote, said Ethan Vera, chief operating officer at Luxor Technologies. Like other mining pools, Ant Pool, which has been led by Bitmain's chief executive officer, Zahn, after the company spun off from the manufacturer in 2021, collects a fee from miners and in return ensures that each member of the pool gets coins generated from the collective computing power. Antaplha has also started offering a revolving credit line for miners that can only be used to pay electric bills. The interest rate is as low as 6.6%, almost half of the rate that big miners have on existing loans, according to Vera. The highest rate on Antapla's credit line is 8.8%, according to Liao. The line of credit will be secured by the Bitcoin miners produce. Electricity is one of the largest operational costs for Bitcoin miners since they operate energy-intensive machines to create coins. Energy prices are soaring due to Russia invading Ukraine, which has sent natural gas prices higher. A heat wave in Texas and other U.S. mining hubs is also putting a crimp on miners as they have to shut down machines to help conserve energy. With Bitcoin prices falling, energy costs can eat up as much as 40% of a miner's revenue, according to Vera. We are taking their biggest cash outflows, electricity costs, and helping them reduce that burden, he told Bloomberg. We all assume that this bear market is going to end sometime, and we just have to make sure everybody makes it through the winter. Public mining companies have been in distress. Core Scientific sold nearly 80% of its Bitcoin holdings in June to cover operational costs, and Bitfarms Limited sold about half of its Bitcoin holdings to pay down a $100 million loan. Meanwhile, major lenders are losing billions of dollars on deals with bankrupt counterparties like hedge fund Three Arrows Capital. To alleviate some of the pressure, Antaplha said some of its loans would not require margin calls, and it would let miners delay payments to Bitmain for mining machines by allowing miners to purchase rigs as collateral. Purchased rigs as collateral. Antaplha is comfortable with the risks, saying it's willing to be behind the co-lender in terms of debt collection during a default. It expects to have performance projections based on Bitmain data and can monitor miners' computing power via Ant Pool. It's a good move by Bitmain because even if they are providing financing and there is a chance of default, they are selling their equipment, said Vera. It's a way for them to bolster their demand by funneling more capital into their system. And I mean, really, I always do talk about this. It's not great to be taking out loans, especially at a small scale. This is obviously for larger scales. It's interesting that they're targeting the electricity costs, or it can be used to do one of two things: purchase equipment from Bitmain because they're partnered with Bitmain, or to pay for the electricity bills. And then all of the Bitcoin that you're mining is being used as collateral on these loans. Now, it does appear that these loans are a better position for refinancing for a lot of these companies because the interest rate is lower. However, I do still think that interest rate is quite high at 6.6 to 8%. And then on top of that, what's going to happen if this continues to be drawn out? They say that they aren't going to have any margin calls, which would be nice, but can you really trust that that doesn't end up just collapsing the entire mining industry? Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.